Prop firms have always seemed like a bit of a dark art in the trading industry, with many traders claiming to be funded but not providing details about how or by whom or how to get there. Thanks to the rise of online prop trading firms, the process of obtaining funding has never been more straightforward. In this video, we're going to be looking exactly at how to join a prop firm yourself and why you might consider doing that. So let's not waste any more time and let's get right into it. As a trader these days, you can't scroll the internet for more than 5 minutes without seeing an advert on joining a new prop firm. We can see them popping up left and right, a new one pretty much every single day. The reality is, prop firms can be advantageous for traders as they provide the option to access capital. That means simply that traders can trade larger accounts than they would be able to do on their own. Historically, prop firms were difficult to work with. They would only let the top 0.1 of traders in. Now with online prop trading firms, all traders have at least the ability to try and obtain that funding. In theory, pretty much anyone from anywhere is able to obtain funding and make trading their career. I'm not saying it's easy, but I'm saying there are no more geo restrictions. You don't have to work on Wall Street, you don't have to work in New York or in London. You can be pretty much anywhere with an internet connection. And a lot of these prop firms have easier criteria than prop trading firms back in the day used to. So let's take a look at the intricacies of prop trading firms and your options for becoming a funded trader. Prop trading is a simple concept that has been used in the trading industry for well over 40 years, starting with the brick and mortar proprietary trading firms based on big exchanges. Prop firms are usually firms that have a large amount of capital at their disposal, and what they want to do is generate healthy returns by using traders, different strategies, and basically diversifying that portfolio between many accounts. Instead of employing traders on salary, most prop firms will instead offer the trader a lump sum of money to trade and then share the profits. For argument's sake, let's say it's $1 million of trading capital. The prop firm will give the trader a few rules regarding drawdown, regarding risk management, the goal to keep the capital as safe as possible. The trader will usually sign a contract and start trading that capital for a share of the profit that he makes. If a trader makes 1% of profit in a month, that's $10,000. If he splits it 50-50 with the prop firm, that's $5,000 in his bank account. Makes for a pretty nice salary at the end of the day. This is typically how the industry works, and we see major differences mostly in the amount of profit splits and the rules that different prop trading firms have. For example, Lux Trading Firm offers up to $10 million of trading capital and a 75% profit split, while there are companies offering like $400,000 in demo capital and profit splits of 85, even I've seen something crazy like 100. There are a lot of prop firms to choose from with lots of criteria, and then I'm not gonna go over all of them in this video. We've made a lot of other videos on our channels about how to choose the right prop firm for you. So joining brick and mortar or the traditional proprietary trading firm is incredibly hard. As it wasn't back in the day, it's still the same thing today. They're always on the lookout for traders, but they're typically looking for the creme of the crop, just for the absolutely best traders with proven track records, being able to manage large accounts, having lots of experience in the past, which most people who are trying to get into trading simply aren't. Before you even consider trying to join a brick and mortar prop firm, you'll probably need years of experience and a verified track record. Ideally, this is going to be on a live account with a large amount of trading capital. I think approaching a brick and mortar prop firm, if you're still trading on a demo account, is a somewhat not a great idea. But if you have a great portfolio, you've managed large live accounts for a while, you have an audited track record, that is the time when you might start considering, contacting proprietary trading firms that are traditional way, and you might actually have some luck of working there. However, it actually might be worth skipping the majority of this and working with an online prop trading firm like Lux Trading, for example. That way, you don't need to spend years of trying to get a track record. You can actually start trading a live account while building your track record. Now, working with an online prop trading firm is much simpler than trying to get into a brick and mortar one. Typically, online prop trading firms require no track record, but instead they will make you undertake an evaluation to see how you manage risk and if you're even profitable. This may seem tiresome, but these evaluations usually last less than a month or two. That's much less time than actually trying to build a track record which is going to take you years probably. At the high level, the process is quite simple. You sign up for a trading evaluation and you prove that you can trade. Once successful, you'll be given login details to a live trading account that is funded with the prop firm's capital, and you'll trade that account as if it was your own, withdrawing your monthly profit split. In the broad sense, it is as simple as that. In most cases, you don't even need to talk to the folks at the prop firm, as most things are handled automatically. But don't confuse this simplicity with it being easy to achieve, as that it is absolutely not. All prop firms require traders to manage their risk, be consistent, and overall be a good trader, which is not an easy feat to do, and don't expect that you're gonna get there incredibly quickly. It takes time and effort just like any career. Now, there are also benefits of trading with prop firms, and I think they are pretty large and something to consider. These benefits definitely include stuff like bigger capital under your management, increased trading profits, freeing up your own capital for other projects in your life or other investments. You're not risking your own capital, so it is decreasing the risk for yourself. Prop firm forces rigid risk management for you, which tends to produce better results. Capital scales in most prop firms that have a scaling plan, so you can actually grow the amount of capital that you trade and that you compound faster than you would if you were simply just trading your own account. With some prop firms, you get trading, mentoring, and education, and at the end of the day, the prop firm is there to guide you with risk management and make sure that you don't blow your own account, which is the case with so many retail traders. So I'd say these are the primary benefits of trading with a prop firm. But ultimately, there is no right approach. There are traders trading their own accounts, there are traders using prop firms. Whatever suits you at the end of the day is the best thing for you. But I think joining a prop firm is a pretty simple process that is worth it for most traders out there. Working with a traditional brick and mortar prop firm tends to be too hard and unachievable for most traders, so online prop firms come and make a much more obtainable alternative to that. And while doing that, they'll allow you, or at least the good ones will allow you, to build a solid track record you can use in the future to maybe work at a brick and mortar prop firm. So that is my take on demystifying prop firms. I hope you liked the video. I hope you learned something. If you want to get in touch with us, leave a comment down below. Subscribe to the channel for more videos like this. Contact our 24/5 live chat. My name has been Oliver. Thank you for watching and have a great one.